Good evening, everyone. This is Wayne, and this is the video version of the trade report for Monday, April 23rd, 2018. Well, the big news today was Google's earnings after the close. Did they beat or miss? Stay tuned to find out more. Greetings, everyone. Thank you once again for spending part of your day with me as we recap the action and activity in the financial markets for today, Monday. And the S&P kind of had a pretty decent back and forth day today. Traded in about a 25-point trading range today, and you can see that we had a little bit of a classic open where we traded lower, and then the market got bought with a buy signal, and it looked as if some algorithms, some computer-driven trading models came in and helped the market get propped up a little bit. It looked like it might go even higher, possibly even up to the 1618 here at 2586, but it did terminate the move. This is the S&P futures, terminated the move pretty much right at the 1272 at 2682 and a quarter, and then we had some rather sustained selling that came in with just a very short stint of consolidation, which occurred right at this kind of traffic jam of Fibonacci lines that all kind of confluenced right about here. And but you can see where obviously it did break down. Now it did so again on computer-driven trading models. So algorithms are becoming a large part of the market and the way it trades. So these large moves that we see and these choppy dynamic price moves are due in large part to the algorithms, the computer-driven trading models. And then, of course, we got bought into the close. And today had a pretty big earnings report. And as I alluded to in the intro, Google was the one on the docket today. Let's go ahead and pull up Google. I've got a chart here of the VIX, which we'll return to shortly. And speaking of shortly, I'm going to keep my videos a little shorter these days. I realize that I am relatively long-winded. I do have, as I mentioned, I think in the last video, the gift of gab, but that shouldn't be something that I just take full advantage of, and by extension take full advantage of you as a result of. I want to keep my videos to about 8 to 10 minutes. That'll be a nice length, I think, for viewing. So this is the daily chart of Google. Google has an average true range, which is the daily point range that it trades on average of about $29. Today, after the close, Google reported earnings, and you will see that they had a rather large move. Now, I'm going to highlight this candle by resting my cursor over it, and you can see probably just barely. And then actually, let me draw a line at the top of the price. Right there is the very top of the candle, and right here is the base of the candle. So you've got this 56-point candle that, and here we go. It looks like, I think we just opened after the quiet time, which is from 2 p.m. to 3 p.m. Pacific Daylight Time. It's when the futures don't trade, and they go through a transition process of today's trade to tomorrow's trade. So we're actually in the Tuesday session all of a sudden, which is kind of interesting. But getting back to Google, this 56-point candle, which was moved at the hands of algorithms and computer-driven trading models, was a 56-point candle. And you can see how high the top of that candle was. It was about $1,124 a share, and the candle closed at $10.75. So it was almost 50 points from open to the high. And if you bought up here, you wouldn't be feeling very good about yourself right now, just because that was a lot of points up top there. That was well over 40 to 50 points to the upside that you wouldn't be realizing in your position at this point. So anyway, what happens tomorrow with Google remains to be seen. We'll have to wait until tomorrow to see that. But we do want to take a look at Amazon, of course. Amazon reports its earnings this week on Thursday. And let's just take a look at the daily chart of Amazon. Excuse me. And there it is. So Amazon is highly anticipated. You can see we had a few nice days last week, and culminating with Friday's monthly options expiration. Amazon really traded off, traded even lower today. Now I am in Amazon. I've got a couple of call debit spreads, and they're down. In fact, they are down. How much are they down? They are down. They're down $170. Now I am looking for Amazon to move at least up to the 1576.44 level, which is the 100% symmetry resistance, and possibly even as high as the 1272 at 1636.49 before earnings this Thursday. So in the next 3 trading sessions, I'm looking for Amazon to move up to that 1272. I need to be out of my positions by the earnings report on Thursday after the close. So no matter what, I'm going to be out of my positions at that point. And there's a rather long explanation for why, but suffice it to say, it is part of my trade thesis, and it has a lot to do with volatility and the options positions that I'm in. So that is what I'm looking at as far as that's concerned. And let's go back to the S&P futures. I just want to once again give you a little bit of a, let's go ahead and I'm just going to open this up a little bit. We'll take a look at Friday's trade and then the overnight session, and just a little bit of story here. So as the market opened on Friday, it just basically collapsed. It looked like it was going to get a little bit of relief, went down even further, and then recovered barely into the close. So going into the close on Friday, going into the weekend, it was looking slightly ominous as it relates to how the market would open on Sunday. But then, right after the close on Friday, Kim Jong-un, North Korea's leader, came out and said that he's basically going to denuclearize. And then Trump came out and said, okay, we're going to meet. We're going to, it's like world peace. It's like, oh my gosh. So when the markets opened yesterday at 3 p.m. Pacific, they opened up about 10 points higher. And I thought, that's all we're getting on world peace is 10 points higher? Okay, something's wrong here. And we promptly sold off. And we did get a gap fill. And we talked about gap fills before. And then we just kind of rode this little strange wave that we ended up getting a little bit of selling from, then consolidating, then we got bought again, basically coming back up to this level. And we went a little bit sideways, and then, of course, in today's session, we did the characteristic selling at the open, got a little bit of buying here, then we really sold, and then we got a little bit more buying into the close. Got Google's earnings, and then, the rest is history, as they say. So the rest of this week, we do have some big earnings. We got Microsoft, we got Amazon, Google, Amazon, and Microsoft. Those are the 3 biggies. There are many, many, many more companies, but those are the 3 that will probably be market. I think Boeing reports this week as well. So, we'll take it a day at a time. We'll see how the market plays out. We'll see the opportunities the market presents us, if at all. But we do need to take a look, as always, at volatility, at the VIX. The VIX didn't come out and play today, which was pretty interesting. We had that big push down, and yet volatility, as represented by the VIX, really was relaxed. Yeah, it went up a little bit, but boy, it came back down again, and it closed lower on the day. So we've got the VIX that's just kind of going, this market, that's still got some issues, but you know what, right now, I think it'll probably get all worked out. And so I am actually looking for the VIX. I'm looking for the VIX to fall down to this 200 period moving average, which is at 13.31. That's all about a $2 move. Sorry, about a $3 move. My apologies. The average true range on the VIX is $2.75. So a $3 move down to the 200 period moving average is not outside the realm of what would be considered reasonable, especially if you say this could happen by the end of the week. We could get some we could get this kind of action, which is what we got not last week, but the week before last week, and then coming into this last week, we got those basically 6 days in a row of volatility dropping dramatically. And then we had Wednesday, Thursday, Friday of last week, where volatility went a little bit higher, kind of a little bit of a bounce, and then we're starting to get it to come down again. Now, I do have to come back to this Ichimoku cloud, which is definitely, putting some pressure on price. And I do think it's going to come down. And when the VIX falls, volatility drops, prices go up, and we get some stability. We get balance. We get a market that remembers what it's here to do, and it goes higher. So that's what everyone is hoping will happen as it relates to this week. This is the biggest week of earnings season, with all of the large companies and large numbers of companies reporting their earnings this week. So will it happen? I mean, by all technical observations, it looks like it will. Nobody knows for sure if it will happen, but that's where I've got my money. I'm long Amazon. I'm long Netflix. I'm long the financials. I'm long the Russell, and I'm long the Dow. And so I've got some hedges, but got to do that. That's the insurance policy. So at any rate, we're going higher now. You can see where the futures, after they just reopened, are going a little bit higher here. You can see just in, let me just go ahead and circle where we're at. Yeah, we're right about here. So we're trading up at about 26.7350. So yeah, we'll see if that continues, see what happens overnight. And of course, tomorrow's session is a whole new situation. But until tomorrow, trade safe, trade what you see if you choose to trade at all. Good night and good trading.